Hey guys, what's going on? It's James here. I wanted to shoot a video for you today because I see a lot of people making a mistake when it comes to these, trades, or when it comes to, trying to trade. I see people buying coins and then the coins drop further. They don't have the stop loss and they end up stuck, and that's what they call holding a bag. And they're hoping and praying that it goes back up or that it turns the corner somehow. So I want to explain something to you that I actually did not. It just did not fully click for some reason for the first 18 months to 24 months I was trading. Maybe not 24, but definitely the first 18 months. There's this saying in trading, the trend is your friend. And I always thought, what the hell does that even mean? Okay, the trend is your friend. How cliche. Well, basically, you have to look at it like this. Let's say that you are buying a dip, right? You always hear this term, buy the effing dip, right? There's actually an abbreviation, BTFD, buy the effing dip, okay? The problem is a dip and a falling knife look very similar to somebody that doesn't understand trends, okay? A dip falls and you buy it goes back up and you make money. A falling knife falls and you buy it and it doesn't go up, it keeps falling and you lose money, okay? So how can you tell the difference? It's really simple. Zoom out, okay? Just zoom out. If you look at a daily chart or a 12-hour chart or a 4-hour chart, it's very, very easy to see what kind of trend you're in. This is a downtrend. How can you tell it's a downtrend? Because it's making lower highs and it's making lower lows. Look, here's our high, here's our low. Here's a lower high, here's a lower low. Here's a lower high, this is probably gonna make a lower low, right? So when you're in a downtrend, you don't buy dips, okay, unless you're just crazy, all right? By the way, I don't mean that offensively. I actually do buy dips in a downtrend, but I sell the rallies, right? I try to find out where my support is and I buy on the supports, and then as soon as it bounces, I sell it, right? For 1 or 2%. Okay, that's literally what I do on a day trade. But the problem is a lot of people don't understand it's not a dip. They don't understand it's a falling knife. So when they buy on the dip, they get excited and they think, hell yeah, I just got a great deal. And then it starts to move up, and that just solidifies their belief that they did the right thing. So for example, there would be people who bought down here and it went up here and they're feeling really good about that decision. Like, hell yeah, I bought the dip, right? I bought the bottom. But what's happening now is it's going back down. Now, we don't know how far this will go. This could create a double bottom, make a nice W and go back up. Certainly possible. It doesn't justify buying it, okay? You still shouldn't buy there. You still shouldn't buy there to hold because you're in a downtrend, which means that realistically, this is more likely, and trading is all about probability, to make a lower low. So if you buy here, yeah, you'll be up for a little while, and the next thing you know, you'll turn around and you'll be down. Okay, that's why it's called a falling knife, because it's not done falling. And this is a lesson that I did not understand in 2018, because in 2017 we were in a bull market, so I could buy every dip and it was just amazing. And then I was buying the dips in 2018. Well, hey, I just want to go back and be like, hey, dumbass, look, you're in a downtrend. You don't buy dips, because look, I bought this dip and it was awesome when it went back up here. Of course, I didn't sell it there because I thought it was a dip, not a falling knife. And then next thing you know, we're down here, so I bought more. And then it went up here, and I'm like, okay, now we're good to go. And then I bought more, and it went up, and I bought more, and it went up, and I just kept buying more. And then I finally ran out of money, right? Around August, I was like, okay, well, I'm out of money now. And then it went down here, right? So that right there is how you'll absolutely wreck yourself. You'll take a trade fund, and you'll very, very quickly turn it into, a 40 or 50% loss when you're buying falling knives. And this works in all time frames. This is obviously a weekly chart, and we started out looking at a daily chart, but the same thing happens, if we look at a 4-hour chart, right? These are downtrends. So if you just came down and you were like buying right here, thinking you're buying the dip, well, when you buy a dip, you just hold and ride it back up, okay? Well, it didn't go back up. It bounced and then just kept going down. Then it bounced and kept going down, and so on and so forth. So again, you can buy them. You just have to understand that they're not dips. They're falling knives. So if you buy down here, you've got to be ready to sell up here, okay? And that's cool, because then you can buy again down here and sell up here, and buy again down here and sell up here, and buy again down here and sell up here, and buy over here and sell up here, right? You're not going to get all those. You're not going to get perfect. But that's the logic in trading in a downtrend. If you're going to go long in a downtrend, that's the logic. On the flip side, here's the thing. You're going to make smaller gains going long in a downtrend, because you're just going to get these small bounces that you can try to sell on. But when you're wrong, you're going to have big losses because it goes down a lot each time. It's a lot easier in a downtrend to short the market. Go short here, close the position here, right? Then go short here, close the position here. See how it goes up a little bit but down a lot, up a little bit, down a lot? you'll make a lot more money going short in a downtrend than you will going long. Now, the opposite is true in an uptrend, okay? If you go back to this uptrend, if you're trying to short, you go down a little bit and up a lot, down a little bit, up a lot, okay? So in an uptrend, you want to be buying the dips and selling the rallies, and then buying the dips and selling the rallies, right? You don't want to be going short and trying to close position, and going short trying to close position, right? Because if you're wrong, it goes up a lot more than it goes down, right? So in a downtrend, shorting is your best friend, and an uptrend, going long is your best friend, but only if you have a lot of experience should you attempt to go against the trend. And even then, most people say it's a bad idea. But with enough practice and experience, you actually can make money playing both sides of the market. I do play both sides of the market. I do go long and I do go short regardless of the trend. I just understand that when I'm in a downtrend, right, if I'm going long, I'm going to be getting out for a small profit, in and out very quickly. I'm not going to try to hold it and ride it for 3, 4, 5, 10, 20%. Okay. In a downtrend, I'll hold my short, for 3, 4, 5%. But not a long, and vice versa. In an uptrend, I might go short, try to scalp a percent or two, but I'll ride my longs up, for several percent, sometimes double-digit gains. So if you don't understand the difference, that's the difference. Be careful. Don't catch falling knives. You're better to skip a trade and wait than to try to rush something, because when you rush something, you will get absolutely destroyed. So for example, I'm sure a lot of people rushed in when this thing fell like this. I'm sure a lot of people bought this thinking this was a dip, like, oh yeah, I'm fixing to get paid, right? If they recognize it as a falling knife and they bought down here around 9,800, they could have sold over here for 99.50. That's about 1.5%. That's a good day trade. It's a very good day trade, okay? But if they bought down here thinking that it was just a dip and it was going to go back up, and they continued holding it, 4 or 5 hours later, look at this. Now they're bam, they're down big time. And chances are this is probably I don't want to say it probably won't bounce. I think it's tough. Right now we've got a descending triangle, right? But normally I would expect it to bounce, right? So if we look at this descending triangle, I don't want to get off on too much technical analysis in this video, but one or two things are going to probably happen. This is either going to fall through here and just really get ugly really fast, or it might bounce off the support line, go up one more time, test the top of this trend, be up around 10 grand, and then fall down, right? So that's what I'm waiting for. Now, I did not buy this dip. I don't plan on buying this dip. Again, I don't find it to be a dip. It's a falling knife in my mind. I'm not willing to play it when we're this close to the apex of that triangle. I'll just wait, and if it breaks south of it, then I'll look at opening an additional short, right, and playing the break with the stop loss above support. And if it bounces up, then I'll be looking to go short up around 10,000 when it hits the top of this range. So again, please remember, I am some guy sitting in a spare bedroom. I'm not a professional financial advisor, and nothing in this video is financial advice. You should always do your own due diligence before making any type of investment in cryptocurrency. If you guys have any questions about this video, be sure and let me know. But I just wanted to shoot this because I think it's confusing for a lot of people. I know me personally, it cost me a ton of money, and I'd really like to try to help you not go through the same things that I did, because it's very painful to spend 2 years or spend a year building up 1,400% gains, which is what I did, and then turn around in the course of 6 or 9 months lose everything you made and more on top of it. So again, any questions, be sure to let me know. I hope you enjoyed the video. If you're watching it on YouTube, please be sure and give it a thumbs up and subscribe to the channel, and I'll see you in the next one.